This video is going to explain to you the accounting equation. It is assets equals liabilities plus stockholders' equity. Assets are resources owned by a company. Liabilities are amounts owed to others. Stockholders' equity is the value of the company according to their own accounting records. It is also referred to as shareholders' equity and owner's equity. Now going back to the basic format, remember, assets equals liabilities plus stockholders' equity. You can also shorten the equation by simply saying A equals L plus SE. Now in accounting, we use something called T account. A T account is a graphic representation of an account balance. Regardless of what account balance you are tracking, the left-hand side will always be a debit and the right-hand side will always be a credit. Assets increase with debit entries and decrease with credit entries. Liabilities and stockholder equity accounts are the complete opposite. They increase with credit entries and decrease with debit entries. Some examples of assets include cash, accounts receivable, inventory, and property, plant, and equipment, or just PPE. Liabilities may include accounts payable, short-term notes payable, and long-term notes payable. Stockholder equity accounts include common stock and retained earnings. That is the end of this video. Please watch my next video for an example regarding these accounts.